Previously, we've had an asset-driven situation where the Germans have been in the driver's seat. Their austerity plan to rescue the euro has been the primary means to salvage the euro as Europe's primary currency. The game changer is that right now it's going to be the overspenders strike back. The Greek election and the French election were both dominated by people who are opposed to austerity, they're opposed to cut back, and they're willing to continue deficit spending. If that happens, you're going to see the euro put under a test that is going to be extremely profound. That's new. Here's a graph that's really worth looking at because it puts the euro crisis in perspective using real numbers, not hype. The first thing to notice here is that back in 2008, 2009, as the United States was struggling with its own response to the financial panic of 2008, the euro was being touted as the replacement currency for the international standard currency. As you can see, the euro has hardly been a paragon of strength. The second thing to get, though, is the complete opposite, and that is that in the midst of the crisis since 2008, when all this debacle was going on and thoughts of Armageddon financially in Europe were being discussed, what hasn't happened is the euro has not collapsed. It's stayed pretty strong. If you look, it's at 2007 levels or above pretty much through the entire process. This is another graph I want to show you. This is a Morningstar graph, and what it shows you is how the European markets have done relative to the US S&P 500 index. As you can see, the euro strength or lack of strength hasn't really been the deciding factor here. The big deciding factor has been the overvaluations of 2000, which caused the tech crash, the tech bubble burst, and the next thing is the financial panic of 2008. Both of those are valuation related, real estate related, and debt related. So the strength or lack of strength of the euro really hasn't been a player here. As you can see, since 1997, any equity market has struggled. What does that mean? That means we should invest lightly in Europe in incredibly diversified mutual funds. Right now, the international asset allocators look best. Thank you very much.